It's a highly held secret of exactly how much silver is in any kind of automobile or any kind of device that we consume as a human race, because all these numbers are kept, very close to the chest. But nevertheless, it's quite irrelevant if silver is $100 or $200 or $300, compared to the price of an automobile. So, but yet the banks are short hundreds of millions of ounces, and they're feeling the pain today.
Over the past year, silver prices have fluctuated significantly, reaching a 12-year high of $32.33 per ounce on May 20th. However, recent trends indicate a decline, with prices struggling to surpass the $30.06 level. This suggests the potential for further losses and bearish correction in upcoming sessions. According to Keith Neumeyer, one significant factor influencing silver prices is the ongoing battle between major financial institutions and individual investors. These institutions have been using short-selling tactics to dissuade people from investing in silver, thereby manipulating market sentiment. However, this maneuvering doesn't seem to impact the industrial demand for silver, especially in critical sectors like automotive manufacturing. Demand for silver across various industries, including photovoltaic, electronics, and automotive, is steadily rising. Demand has outpaced supply for the fourth consecutive year, creating an attractive investment opportunity. The photovoltaic industry, in particular, has seen a remarkable 64% increase in silver demand, from 118.1 million ounces in 2022 to 193.5 million ounces in 2023. This upward trend is expected to continue, with a projected 20% increase in 2024. However, the silver market is facing challenges on the supply side. Banks are currently short hundreds of millions of ounces of silver. Traditionally, banks provide financing to cover the gap between selling and delivering silver, but recent pressures have pushed these credit limits to their breaking points. This situation poses significant challenges for gold and silver producers, struggling to sell metal at prevailing market prices due to these constraints. To address these challenges, some companies, including Keith's company, are taking innovative approaches. One such initiative involves pulling silver from the traditional banking system by establishing its mint. This move aims to gain greater control over the supply chain and reduce dependence on external financial institutions. By doing so, these companies hope to stabilize the market and ensure a more consistent flow of silver. We will present clips from Keith Neumeyer's interview with Liberty and Finance. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Shorts are trying to dissuade individuals like ourselves to, put money into this as an investment into silver. It doesn't affect the industry because it doesn't cost, for a BMW, whether it's 30 grams or 40 grams of silver, in an electric car, whatever the number is, and it's a highly held secret of exactly how much silver is in any kind of automobile or any kind of device that we consume as a human race, because all these numbers are kept, very close to the chest. But nevertheless, it's quite irrelevant if silver is $100 or $200 or $300, compared to the price of an automobile. So, but yet the banks are short hundreds of millions of ounces, and they're feeling the pain today. And I know that for a fact. We deal with the physical market, and yet as a miner, we sell our ounces, and we have to sell our ounces because we're not in the business of hoarding our own ounces. Our institutional investors expect us to take advantage of the current metal prices, and they want to see those revenues and those profits, and that affects the analysts, and that affects the target prices they put on our stock, and that affects the shareholders who own. We have 80,000 shareholders worldwide. If all of a sudden we have no revenues, then that's not going to be very good for our share price. So we have to take advantage of the current metal prices, which we do and are doing. But it's interesting because the bank limits that a lot of these traders have hit their limits. Which I remember going back to 2011, the same phenomenon occurred, but it was so long ago that I kind of forgot about it. But now, as a miner, the gold producers and silver producers out there, they're having issues selling metal at current metal prices because all the credit limits are all at their limits throughout the entire banking system. Because there's a delay from the time we sell our ounces to the time we actually deliver the ounces. And that could be a 30-day delay, it could be 60 days, it could be 90 days. And that difference is financed. And the banks finance that on behalf of the mining sector. And that's a relationship that's been going on for decades and decades and decades. And that's just the way it works. Yet now, those limits have come to numbers that have reached a breaking point. And I'm going to spend some time on this topic over the next couple of months and see what can be done from a mining business perspective to see how we can avoid such things in the future. One of the things we have done is open our own mint so we can pull silver out of the banking system. We can talk further about that. But Dunnigan, your question was also on the supply side. I think you had about 10 topics in your preamble, which I should have had a piece of paper in front of me and wrote them all down. But on the supply side, we haven't seen any new supply, and I don't see any new supply. I see less supply.
While JP Morgan no longer holds a short position, having mostly exited the paper silver markets after acquiring a massive stockpile of metals and maintaining a neutral stance, Keith highlights a concerning issue. Currently, there are no such limits, allowing banks like JP Morgan and HSBC to sell large amounts of silver easily. This lack of regulation raises concerns, emphasizing the need for a system to prevent banks from shorting more silver than is reasonably available in the market. Just as traditional banks have limits on lending compared to deposits, similar constraints should be imposed on short selling in the silver market. Despite a decline in the commercial net short position by 781 COMEX contracts, there were no significant shifts in the disaggregated COT report. Managed money traders increased their net long position by 308 COMEX contracts. The consequences of unregulated short selling extend far beyond financial markets, impacting entire communities supported by the mining industry. Mines are vital in local economies, contributing to education, infrastructure, and essential services. Yet, when metal prices are artificially suppressed, these communities suffer, unable to realize the full value of their resources.
You would have to get the regulators to put a limit on the banks. So right now there's no limit. The banks have no limit on what they can short. So if JP Morgan, HSBC, or whoever it is, wants to short a couple 100 million ounces of silver tomorrow, no big deal. They can do it on a click of a mouse. There should be a system in place whereby we know what the world supply of silver is. It's about 820 million ounces last year, approximately. So, the bank should be just like a regular bank. You're allowed to go 10 times above your deposits. So you can't expose your bank, more than 10 times than what you currently have from your clients on deposit today. So that's a number. 10 times is what the banking system uses to manage their books. So if you limit, you got 820 million ounces of production, you limit the banks to 8.2 billion ounces at any given time. That at least limits them, and they can't go beyond that number, and that gives the producers at least a little bit of room to make a little bit of extra money. And what does a producer do? And this is really what drives me crazy: is producers supply communities with wealth. We educate thousands of children. The schools and the communities that we're active in were built by us in many cases. We supply the water infrastructure, the electrical infrastructure, the internet. We supply computers, pencils, papers, garbage collection, waste collection. We do everything. If it wasn't for a mine in a small town in the middle of nowhere, these communities wouldn't exist, and these children would not get educated, and they would not go into universities, and would not have a sustainable life. They'd be living in poverty, and yet the banks don't want the metal prices to go higher. So who are they actually hurting? They're actually hurting these small little communities around the world who can't get proper price for the commodities that these communities are producing. And it's quite shocking, and that more politicians don't come to the forefront and argue this point. And I'm always out there saying, hey, look, who are you hurting? Really. You drive through these small towns, and I've been through many of them. And from the early days in Africa, to my current position, in Mexico, it's the amount of wealth that the mining sector creates is phenomenal. Yet, we don't get the support from the governments because they don't want to, walk away from their desks and travel to these communities and see these, young kids walk around school uniforms with computers in their hands and, wonder where all this money came from, right? It didn't come from the government, I can tell you that. So anyways, going to supply. I don't see any reason why supply is going to increase. I don't know of a large mine that's going to be coming online anytime soon. There's a lot of unpermitted mines around the world that could be permitted, but they're not permitted. So that's, up to the individual company. You should probably talk to them and get details on what's the issue, because every jurisdiction, every project has its own unique, issues with them and reasons why some permits take longer than others. But that's really what it comes down to, is really permitting. If governments want to see the green revolution continue on the efforts or on the direction that they want, or at least suggesting they want, the mining sector does not produce enough copper, does not produce enough silver, zinc. You go across the board to basically all metals. We're simply not producing enough metals to meet the demands that the governments are suggesting that we try to accomplish over the next 20, 30 years. And they're just, they're oblivious to what's actually going on in the industry. Metal supplies are dropping in front of our eyes, and the politicians aren't doing anything about it.
Looking forward, we could see continued volatility and manipulation if the issues surrounding unregulated short selling in the silver market persist. With constraints on banks' ability to short sell large amounts of silver, the market may remain stable, impacting investors and communities dependent on the mining industry. Share your thoughts on Keith's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.